Markets. We're going to go to China now. Jameel Ahmad is the Global Chief Market Analyst. He's also Vice President of Corporate Developments at FXTM, and he's currently at FXTM's office in Shanghai in China. Jameel, good to have you back on.
Thank you very much for having me.
Normally we would talk local markets, but I thought we'd take the opportunity to talk to you about China since you are there. Front and centre at the moment, prospect of a global slowdown led by China, according to most pundits. Plus, the President, Xi Jinping, is in the United Kingdom. Let's start with GDP figures released at the weekend, though, Jameel, and thoughts from on the ground.
Absolutely, yeah. China just doesn't leave the news headlines right now. Now, what we've seen is a China GDP over the weekend. It actually fell below the government target at 7%. Now, this is really interesting because in the wider media, this has been talked about a lot. But locally, there is not so much concern about the local GDP because basically the local economy is still doing well. And I think that concerns over slower economic growth in China will only begin to have a domestic impact when it really begins to affect the local employment data. Now, this is one of the things I keep pointing out in the market reports, is that the problems with the China economic data slowing down actually stretches far further than China because so many economies are reliant on export trade with China that they're basically going to be the ones that have to suffer the fallout from a decline in China trade.
Jameel, let me ask you about the President's visit to the United Kingdom. There's been much attention on this, obviously, in international media, the idea of China investing in domestic nuclear facilities in the UK, for example, the issues with Chinese steel imports affecting workers in the UK. There's lots of focus on this, but I guess also it plays well in China in terms of international relations.
Absolutely. No, there's a lot of positivity over this story because basically it's seen as internationalizing the China economy. It's seen as developing global relations and also establishing a very strong footprint with the UK economy. Now, interestingly, we are seeing the UK financial centre becoming one of the largest offshore centres for renminbi trading. So there's clearly interest from both the UK economy and the China government itself to continue developing what's becoming quite a close relationship. I mean, this is a significant story that's spreading around locally.
Finally, quick look at currencies. That's your domain. Where's the money today?
Yeah, well, look, we're seeing a lot of volatility in the dirham right now. I mean, I understand it's a pegged currency, but there is an increase in volatility. And this is basically because of the dollar weakness recently, because of the pushback U.S. interest rate expectations. Now, over the past week, we saw the dirham slip a lot against the Japanese yen. But overnight, there is some really concerning data from Japan, and this is increasing expectations that the Bank of Japan are going to have to increase stimulus. So now I see an opportunity that the dirham can recover momentum against the Japanese yen. The dirham euro, again, there's an ECB policy meeting tomorrow, and it's basically the consensus is that the European Central Bank are going to talk down the euro. So I think we can see the possibility of the dirham recovering some momentum against the euro. And the British pound is gaining a lot of interest because against the dollar, it's coming very close to a 1-month high. And as soon as it trades above 155, now if it does, because it's rejected it quite a lot recently, there's going to be some interest in the British pound from traders in regards to purchasing. Now I'm looking to see whether the actual dirham slips against the pound over the upcoming period. But, the currency markets themselves are very interesting right now because there's a lot of confusion over global central bank intentions. Now, I personally am very bullish on gold right now. At the end of last week, the metal jumped close to $90 since the beginning of the month, and I basically think that because there's a lot of confusion over central bank intention, there could possibly be some hesitation from traders to purchase currencies, and I see this as an opportunity moving forward, despite the recent gains, that investors could be encouraged to look for safe haven assets such as gold.
Jameel Ahmad's the Global Chief Market Analyst, VP of Corporate Development at FXTM in Shanghai at the moment, back, I guess, in Cyprus, where he's based next week. We'll talk to you next week, Jameel. Thank you.
Thank you very much.
Stay connected with